Good morning, everybody. Today, we are going to cover week 4 of Accounting 101. This is Paula White, one of your instructors, and we'll continue. Congratulations to getting to week 4 of Accounting 101. You've had a challenging 4 weeks. Hopefully, you've learned a lot. And Linda just showed up, and if Linda could tell me, type in her last name, that would be great. And we have someone else that showed up. We have Linda and Nancy. So Nancy, if you could type in your last name also, that would help. And I'll get the chat box up. Thank you. Congratulations all for reaching week 4 of this mod. Hopefully it's been a good one that you've learned a lot in. So we'll continue. I don't have you muted at all, ladies. So when you want to ask a question, just unmute yourself and ask it as I'm going on, because that might make it easier since there's only 3 of us on the line. Okay, someone's unmuted right now. Okay. So again, the introduction, I just introduced myself, and the schedule for the live sessions is today at 11 a.m. is me, and I am doing the instructional part of the lecture series, whereas Jeannie, Natasha, Matt, Richard, and Carrie are doing the one-on-one sessions that you can log into. Even if you're my student, you can certainly go to Carrie's session or Richard's or Natasha's or Jeannie's or Matt's if it fits your schedule. It's all about you. So if you have a question and it happens to be, let's say, 6:15 on Wednesday evening, check the schedule and you go, great, I can go and ask Matt the question. So and you can have one-on-ones, and those one-on-one sessions are not recorded. So it's not there for everyone to hear. And if another student pops in, then they'll just wait their turn. But what you're asking might be the same question that they want to be asking too. So it all works out for everybody. Okay, to remind, you also have access to Marianne Stratford, and she's your tutor this mod, and her hours are Tuesday, Wednesday, Thursday, and Saturday, basically late afternoon through the evening hours for everyone's convenience. And her Skype is mer.strat1. Skype is 801-717-9956. So her email address is marian.stratford@stevenshinniger.edu. So take advantage of all these resources that you need to take advantage of. You're coming down to the last week, which means you need to understand the material. If you haven't, then you have some challenges. So today's agenda, I'm going to give you some reminders, some more advice for success. We're going to cover Chapter 5, do an overview of what you've learned so far in Accounting 101. Then I'm going to give you what QuickBooks looks like, a little tour through QuickBooks, and to show you that what you've learned in this class is the background and basis for QuickBooks. And then I'll open it up for questions, but the questions can come at any time, Linda and Nancy, so don't be shy, but do pop in on your microphone. And I'll try and keep an eye on the chat box too. And we'll just make sure that this is being recorded. Okay. So, reminders. Mega lectures are available. They're usually within 9 to 15 minutes in length, and they are very informative and instructional. and they're available in your class materials. This online session certainly is a resource for you to be able to use. This recording is being recorded today. This instructional lecture is being recorded right now and will be available in your instructor's announcement section, probably within a couple hours after this is over, because it takes me about an hour and a half to render the files and upload them where they need to be. So they'll be there later this afternoon. Remember to keep up to, you have no discussion forum this week because it's week 4, but you still do have daily checkpoints, and I encourage you not to, I encourage you to participate with the daily checkpoints and don't throw any points away by not doing them. And you don't have any homework this time because basically you have your final exam. So my advice for success, and this is what I've told you every week this month, is Accounting 101 is not a course you can do beginning this coming Saturday. The ladies on the call with me right now, they know that. So they've been participating throughout the 4 weeks. Read the textbook, watch those mega lectures, keep up with the course daily, and don't lose points for late work. That can be a killer. And participate in the online sessions and ask for help when you need help. So the student success team, the tutors, are here to help. We are all here to help you. So this should be chapter 5 instead of chapter 3. Overview, okay. So let's go to the actual PowerPoint. In the meantime, I'll ask the 2 ladies that's on, how was last week? Did you understand, and was it, were you able to do the work with some ease? Do you understand it to this point?
I think last week was the easier week.
Good. Probably because you already had down pat the hard work of debits and credits and T accounts. Do you think it just came together easier last week because
we had
already did some hard work and actually learning the beginning couple weeks?
Yes.
Yeah, well, congratulations on that. And continue it, because I think you have Accounting 102 right following this. So accounting is very, it builds on itself. So congratulations for having week 3 be easier, and maybe hopefully week 4 will make sense and make it easier even more so. So that's my goal. And what about, was that Linda or was that Nancy?
It was Nancy.
Nancy. Okay, so what about Linda? Or did you have any major bumps in the road from last week?
Not really.
Okay, so things are working well?
Yeah.
Okay. So just know that, just pop in with questions at any time. So we're going to go to chapter 5. And we're going to talk about the worksheet. And it's a planning document. It's a way of organizing our thoughts as accountants. And it's a way of seeing all the minutia detail in one place so we can see what we really have in front of us. Sometimes I think when we work with a lot of detail, all the pieces get lost, and we hope we found them all, but we're not quite sure. And this is a way of making sure that we know what we have, that everything's in its place, and that we can make some planning on our adjustments and seeing how our financial statements will be looking. So that's the purpose of the worksheet. And we're going to, the objectives for section 1 is to complete the trial balance on the worksheet, and prepare adjustments for unrecorded, as of yet, unrecorded business transactions. So here we see that the worksheet really has 11 columns. The first column is, the first column has the account name, and then there's 5 sections, and each section has 2 columns within that section. So here's a trial balance, and there's a debit and credit column under the trial balance. Then we have another section called adjustments, and we have a debit and credit column under the adjustments. Then we have the adjusted trial balance, debit and credit. And then after we have the adjusted trial balance and we like where it is, then we can do an income statement and a balance sheet using these same double columns of debits and credits. So we have a trial balance, then we have the adjustments. What do you think the adjusted trial balance will be? Do you think it's going to be a combination of a base?
It's the difference between the trial balance and the adjustments.
Yeah, it's the trial balance with the adjustments applied to them. Yes, good, thank you. So the 4 steps in completing the trial balance section includes enter the general ledger account names, transfer the general ledger account balances, the actual general ledger and those T accounts inside the general ledger, take those balances and transfer them to the debit and credit columns of the trial balance section. Total the debit and credit columns to make sure that they are in balance with each other and equal. And then place a double rule under each trial balance column to show that the work in that column is complete and is in balance, that you've done the addition and everything's complete and in balance. So what we just went over was write down your account names, go to your general ledger where you have all the T accounts for every single account that you deal with, and go to the cash account, and you see that the cash account has $111,350, and it's a debit balance in the general ledger, and you're going to put it in the debit column. Then you go to the next account, which in the general ledger will be accounts receivable. You see that that account has a $5,000 balance. Then you're going to put $5,000 in the debit column, in the line accounts receivable in the trial balance section. And you're going to complete that process for every account in your general ledger. Once you do that, then you're going to add up the debits, and you're going to get $150,500 in this example. In the credit column, you're going to add those up, and you're going to get $150,500. You're going to be happy because those are in balance and you copied them over, right? Then you're going to put a double underline. Where's my cursor? You're going to put a double underline underneath the two $150,000 amounts to indicate that, yes, I've added these, and yes, they're in balance, and everything on these 2 columns are complete. So that just says it's finished, it's complete, and it's good. So then you have adjustments. So when all the adjustments are entered, as you're planning these adjustments, then you're going to total them and also rule the columns. So, for example, one of these adjustments is supplies expense. We're going to debit the expense, but we didn't pay for supplies this time, but we're going to take it out of the supplies that we actually purchased in a previous transaction. Our supplies account has $1,500 in it. We looked at the supplies cabinet and identified that we only have $1,000 of supplies left, so we're going to have to reduce that account by $500, because we used the supplies, and therefore this is the supplies expense. So this expense will be on the income statement in the same period of time of the revenues that these supplies were used to support. Likewise, remember prepaid rent, we had like $8,000 in prepaid, and the current month passed, so we have a reduction to prepaid rent because we actually had converted the prepaid rent into a rent expense. This expense will be in the same income statement in the same month as the revenues that we earned when we were in that property. And then we have depreciation expense, $183, and then a contra account, accumulated depreciation equipment is a contra account, and it'll be a credit. Now I'm going to go a little bit over the relationship between equipment and accumulated depreciation equipment is, and what depreciation is. So here we have equipment, and it's an asset. And what is the typical balance of an asset? Debit or credit?
Debit.
Debit. So that's why equipment has a debit balance to it. However, accumulated depreciation is a contra asset account. So it's going to be just like your teenagers. They're a little bit, you say do this, they do just the opposite. So this is our little contrary teenager. It's going to still be in the asset section, but it's going to carry a balance that's contrary or contra to the asset account that it's adjusting. So equipment is the mother account, and accumulated depreciation is the child account. The parent account, $11,000, is going to be reduced in the balance sheet by $183 because as we use up a piece of equipment over time, its utility will be decreased and eliminated. You can only use a projector for so many hours, and then the bulb goes out, and then the bulb is as expensive as the projector. So basically, you're ending up buying a new projector every time the bulb goes out. So when you use up the utility of a piece of equipment or a building or a vehicle, you're going to be depreciating it. So that's going to be a depreciation expense, debit, because expenses are debit, and you're going to credit the asset for $183, but the asset that you're going to choose is the contra account. Accumulated depreciation is a contra account that's associated with its parent fixed asset account. In this case, they're both equipment accounts. Does that make sense to you two ladies?
Yes.
Yes.
Yes? Okay, good. Thank you. So now we're going to continue, and this is section 2, financial statements. And we're going to complete the worksheet and then prepare the financial statements. And then journalize and post the adjusting entries. We've seen this, I think, every week as we've gone through. So step 1 is to analyze the transactions, then journalize the data into the journal, and then we posted the journal entries into the ledger, and now we're preparing the worksheet. So now you've already seen how to prepare the first 2 sections of the worksheet. Now let's learn how to complete it. So let's prepare the adjusted trial balance. And the ladies were right. It's the you have a trial balance, and those are the balances that are actually in the general ledger. These are the adjustments that you want to make to the general ledger, and you're just using this as a planning tool right now. These are the adjustments that you want to make: a debit to supplies expense, a credit to prepaid, a debit to supplies expense and a credit to supplies. And that's why A is by both of those parts, so you can identify both sides. 4,000 and 4,000 have the B by it, and C is the 183 and the 183. These are planning. These are in the planning mode. They've only been written up in these two columns at the moment. They have not yet been journalized, and they have not been posted to the ledger. So when we go to our adjusted trial balance, we're going to go to the trial balance columns and see that cash has $111,350, and there's no adjustments being made to cash, which gets us to an adjusted trial balance of $111,350. The same for accounts receivable. However, when we get to supplies, we have a debit of $1,500, and we have an adjustment of a credit of $500. So what happens when we have a debit balance of $1,500 and an adjustment of a $500 credit to the same account?
You subtract the credit from the debit.
Perfect. And that's why we have a $1,000 balance in the adjusted trial balance columns. Likewise, let's see, prepaid rent has a debit balance of $8,000, and we're adjusting it downward by a credit of $4,000. So we're subtracting the credit from the debit balance to get us the $4,000 balance. Accumulated depreciation has no beginning balances, but we're going to make a $183 credit adjustment, so it's going to have a $183 credit balance in the account after all the adjustments are made. 100,000 gets moved over, 5,000 gets moved over. What happens if accounts payable with the credit balance of $3,500 to begin with, let's say we paid off $500. Let me see if I can get my okay, so we're going to reduce our cash by $500. These are always fun to do when you have a mouse pad. And then we're going to credit accounts payable by $500. I'm doing this for a reason. Here we have a credit balance in the account of $3,500, and now our adjustment is a debit balance of $500. So what would we do over here for the credit balance?
You would subtract the debit from the credit.
Perfect, and that will give us a reduced credit balance in this account of $3,000. Do you all see that?
Yes.
Okay. I know I should stick with my, ooh. Don't know where that came from. Okay, I'm going to clear this out. Okay. Okay, I was getting a strange error message there for a second. So I think hopefully the trial balance, the adjustments, and the adjusted trial balance part of this process should just be pretty straightforward. You just have to make sure you are very cautious about putting the numbers in the right columns, or else they will not balance. So the error finding tricks that I gave you last week of dividing the difference by 2, dividing the difference by 9 will help you out to try and find where you may have made the mistake. Assuming that you may make mistakes. I always do. So the total of the debit and credit columns in the adjusted trial balance section, and confirm that these debits equal these credits. And they do, so we can celebrate. Now, from this adjusted trial balance column, we can then see what our balance sheet and income statement will be looking like. So what account categories will be on the income statement? Assets, liabilities, equity,
The debit.
revenue, expense, dividends.
The debits.
So revenue and expense accounts will go on the income statement, right? Because sales
Right.
minus expenses will get you net income. So we're going to figure out which of these accounts, I'm going to get my annotation again. We're going to figure out which of these accounts are balance sheet or income statement accounts. So our assets on the income statement? No. Are liabilities on the income statement? No.
No.
Are the capital or the drawing account on the income statement? No. So we have the income and all the expense accounts are on the income statement. And this is expense here. So it is expense there. So basically, I'm just going to draw a line. Hopefully, it'll be a straight line all the way across. So you can see now that the fees income will go in the income statement column, and the expenses of $8,650 will go in the debit columns, and the additional adjustments that we made, the 500, the 4,000, and the 183, will be going over here to the 500, 4,000, and 183. So this little box right here includes all the items that will be going on our income statement. Revenues would be 47,000, and the expenses will total 13,333. Now we're going to do the same thing with the balance sheet accounts. So if they're not the income statement, they're going to go on the balance sheet. You can't, there has to go one of either one of those two sections. It's either going to go on the income statement or the balance sheet, and you're not going to have anything that's on this worksheet that will not be in this set of columns or this set of columns. Likewise, you're not going to have something off of this worksheet that should be in these two columns. These are totally inclusive. So let me clear out my current drawing and then draw the line here again. There we go. So do you see that cash, accounts receivable, supplies, prepaid rent, and equipment have just been transferred over to these columns? and that the 183 contra account, the 3,500 payable, and the capital account, and the $5,000 drawing account are all here and here. It's just a copy job. And then you do a subtotal, and you find out that the debits aren't equal to credits, and the debits aren't equal to credits. But it's okay, because at this stage, if you subtract these and find out what the difference is, it'll be the same difference as you have here. The difference is retained earnings does not include these transactions here in the income statement. So you're going to have to make an adjustment right here to the worksheet. You're going to make an adjustment right here and one right here, and that will get both columns to be equal, but your income statement information will be over in the balance sheet. Let me get rid of my So here you see that we have $33,667 here, because that's the difference between $47,000 and $13,333. We put the difference here, and then that will make our debits equal our credits on the income statement. But can we make a debit somewhere without making a credit? No. Debits have to equal credits. So we're going to, since we debited this column, I lost my mouse. Since we debited this column, we're going to have to credit the balance sheet column for $33,667. When we do that, lo and behold, both of the balance sheet columns are now debits equal credits. So we're in good shape. And can anyone tell me why I should expect credits and debits not to be equal on the income statement?
On the income statement, you have the expenses, and because you're subtracting your expenses from what you actually have made.
Right. So hopefully you made some money, right?
Right.
So if debits here in this line right here, the 47,000 and the 13,333, if they were even and they were equal, you didn't make any money, but you didn't lose any money. What your revenues were equal to your expenses, and you made zero profit. That doesn't make the owners of businesses very happy when you make zero money. So you would expect these two columns to be off, because the further they're off and the credits are larger than the debits, the bigger profit you would have. So this right here is your profit. So good answer. I'm going to remove my markings, clear all drawing, and okay. Now, what do we do with this? Because you can't really give this income statement and this balance sheet to your supervisor or to the owners of the business, because it's too busy of a report. So what you're going to do is to use the same information, the 47,000, the 8,000, the 650, the 500, the 400, the 183, totaling to 47,000 and 1333 and 36,667. You're going to use that same information and put it into a income statement format. So here you have revenues, you have fees income, 47,000. Then you have expenses, salaries, utilities, supplies expense, and rent expense, and depreciation. And these numbers are directly from the worksheet. And this is the total of the expenses that we also were working with on the worksheet. And the 13,333 from the 47 will get you the $33,667 net income for the month. Kind of cool. Then you can do the same thing. We've done the statement of owner's equity, I think, from week 2 and week 3. Well, we're going to do the same thing here. So let's go back to the trial balance. We have capital account of 100,000, the drawing account of 5,000, and the income of 33,667. So that information will be used. The beginning balance of the capital account was 100,000. Net income was 33,667. Your withdrawals were 5,000. And that gave you an increase in the capital account, which was just the netting of these two. And then 100,000 plus 28,667 would get you the capital account at the end of the period of 128,667. Now the next statement that we're going to do is the balance sheet. And we're going to basically pull this information for the assets off of the balance sheet section of the trial balance of the worksheet, and the liabilities from the balance sheet columns of the worksheet. And this 128,667 comes directly from the report that we just did. Now notice that on the account form of the balance sheet, we have equipment, 10,817. This is a net amount. Remember our contra asset account? Well, we had equipment of 11,000 and our depreciation expense, accumulated depreciation of a credit of 183. We're netting these two together. 11,000 minus accumulated depreciation will get us a locked presentation. Okay. I love it when things get locked down, don't you? So the 11,000 minus the 183 will get you the equipment balance of $10,817. That's the account form of the balance sheet. The report form of the balance sheet will get you the same information, but it will give you the details around the equipment. Like the equipment cost 11,000 less your accumulated depreciation of 183 will get you the balance of 10,817. Now, equipment and fixed assets are not the only accounts that will have a contra amount to them. Typically, and you probably get this in the next accounting course, accounts receivable typically will have accounts receivable, and then you'll have less reserve for doubtful accounts. Because when you have people owing you money as a business, not everyone, unfortunately, will pay you because of business downturns or cash flow issues. So you're going to have 5,000 over here, and then maybe less allowance for doubtful accounts, 500, which will make this $4,500 balance. So this isn't the only details that we'll need on a balance sheet for management purposes. So I think that's the last slide. Yep. So for chapter 5, Linda and Nancy, do you have any questions on these two, on this slide, on this series
No.
of slides? Was that a no or a yes?
No.
So we have one good person. Do we have another one?
I don't have any questions about this. My question would be is, like when you're preparing your statements for the end of the year,
Yeah.
What do you carry over to the next year? Do you just carry over your ending balances from the previous year and start all over, or do you continue on with the same?
Okay, that's an excellent question. And basically, what you're going to do in the first week or two in Accounting 102 will be you're going to zero out. Okay, do you see here where we have net income and we basically make net income 0? And then we actually put net income over here into the balance sheet? Well,
Yes.
we're going to hard code that information into the balance sheet. And it's a set of closing entries that happen only at the very end of the year when your business is done for the year and before it opens up for the next year. What happens is the fees income account will be zeroed out and essentially put into retained earnings, or in this case, capital account. Then all the expenses will be zeroed out, and each one of these would be a debit, a credit, and it's going to be debiting retained earnings over here, or the capital account. So these accounts, the fees income, the expense accounts, and the drawing account will all have zero balances immediately after the close of the year, but before you open up the new year. So the only accounts with balances in them will be the asset accounts, the contra asset account, the accounts payable, and Carolyn Wells capital account, this $100,000. After all the other adjusting entries, the year-end closing entries have been made, the capital account will have $128,667 in it as its balance. So the only accounts with a balance at the end of the year, at the beginning of the year, will be the permanent accounts of assets, liabilities, and the capital account. And the word I used was permanent. The other accounts are temporary accounts. The withdrawal accounts, the drawing account is a temporary account, and the revenue and expense accounts are temporary accounts because they only have balances in them throughout the year, because at the end of the year they get zeroed out and transferred over to the capital account at the very end of the year. Does that make sense?
Yes, it does. Thank you.
Okay. Any other questions? No? Well, I promised someone a couple weeks ago, the last week, I would spend a little time. Well, I think you basically have an assessment this time, which you don't have a discussion forum and you don't have homework, but you have your assessment, which is understanding what you've learned in class so far. So I think what we've learned in class were the debit and credit rules, what increases an asset would be debits, what increases a liability would be a credit, drawing would be increased with a debit, revenue would be increased with a credit, and expenses would be increased with a debit. So every student, everyone has their own way of learning these rules, and it could be from some of those videos, it could be from a certain picture, it could be for a certain mnemonic trick, or DEALER or whatever one works for you. Keep grasping onto it until you really understand debits and credits. Then we introduced a T account, which basically went into the general ledger. So we analyzed the transactions and figured out which accounts they would impact, and if it was going to be using a debit or credit. Then we learned about journal entries and how to make them, the proper formatting of a journal entry, and that journal entries are made chronological. And then after you make the journal entries, then you post them to the ledger. So those are the important verbs here. You journalize the journal entries, then you post the journal entries to the ledger. And then today we did a preparation of a worksheet and prepared financial statements. Then at the end of, then we have to record the adjusting entries. That's what we didn't mention already. We did this cool worksheet, right? We did all this. These adjustments are not yet in the general ledger or the general journal. They're just on this worksheet. So now you have to go to the general journal and journalize these 3 journal entries and then post them to the ledger so that the ledger's balance will be exactly your adjusted trial balance in this planning document. Then you did the income statement, then the statement of stockholders' equity, and then the balance sheet. You've learned a lot in these 4 weeks, and I hope you are gentle with yourself and congratulate yourself that you've done a lot. This for 4 weeks, you've learned a lot. So now I'm going to, if you still want me to, I want to show you that this is relevant. I'm going to move these boxes over so I don't have, I keep seeing half my screen. Okay. So hopefully you see on the on your screen QuickBooks. Do you ladies see QuickBooks? Like a blue, white, and gray?
Yes.
Yes.
Okay. This is the QuickBooks is a software package that many businesses use, from sole proprietorship individual businesses through businesses with up to maybe 1,000 employees. It's a very popular software package, and it has unique add-ons for the construction industry, for the professional service industry, for not-for-profit. It's got a lot of bells and whistles built in, but as you can see, it has a workflow here. When you deal with buying product from a vendor, well, they have an enter bills section and then a pay bill section. Then you have, if you send, when you make a sale, you create an invoice. Then you receive payments from your customer and then record that deposit. If after you created the invoice, if you didn't get paid by your 30-day policy, then you can make a statement, like you get your MasterCard and Visa and mortgage statements. You get your statements, and then you can actually add finance charges to that statement. And then when they pay you, they're paying the amount that they owe you plus the finance charge. And then when they pay you, it goes to as a bank deposit. Then you can refund and credit your customers if you need to be. And you also have payroll, which is beyond the scope of this course. And here's a chart of accounts, and you know what that is. Let's just see what one looks like in this software. Basically, this is it. You have a bank account, fixed asset accounts. So you begin with the asset accounts of cash, furniture and fixture, and accumulated depreciation. Then you have liabilities. You have customer payments, and you have payroll liabilities. And then you have equity. Hopefully this looks familiar. You have equity, you have owner's equity, you have a drawing account, then you have sales accounts, and if you're retail, you have cost of goods sold, and then you have expense accounts. It's the same thing that we've been learning in this class. Now, I want to show you one other thing, and that's in reports. You can memorize reports so you don't have to keep doing them. There's profit and loss, income, balance sheet reports. You can have reports based on your customer information. Who did you sell to? What did they buy on a summary basis or on a detailed basis? What about the ship to addresses? What about your pending sales? This is your job time and mileage. How about vendors and payables? What is your vendor balance summary? What about the details? How much do you owe for each of your vendors by their invoice? You have employees and payroll, and you have banking. But where I'm going right now is the accountant and taxes. If you go to the accountant, you see a trial balance. You see a general ledger, adjusting journal entries, and journal. Well, why don't we look at what the journal looks like? And this is a journal for this month, and this is an example company. So basically, for this month, there's 3 entries. The first entry is a debit to cash and a credit to owner's capital, Paula White. That's the entry that you started this whole course with. You increased cash and you increased owner's capital, owner's equity. And here I put an example of I paid for equipment rental of $1,000 and reduced my cash by writing the check. Here I got a bill in. I didn't put it in accounts payable immediately, so I just wrote a check for it and put it directly to the utilities account. Now, what caused this journal to happen? Well, those are journal entries. So let's just double click on a journal entry and see what it looks like. This very first one is dated June 1st. Journal entry number is 1. The type of entry is a journal entry versus writing a check. So the name is Paula White, and come on. This should show. Oh, I want to see. I'm almost there, ladies. Reports. Okay, this is what I wanted. This is the entry. This is the form that we make inside of QuickBooks, journal entries. Make journal entries form. So I debited. First line is always debits, right? So I debited cash in this example for $10,000. The memo I put in as initial investment. The name is Paula White. And then owner's capital. I credited owner's capital dash Paula White with a credit. I had it having the same memo of initial investment. And that's the journal entry. That's the same thing that you all did when you were analyzing the transaction and journalizing the transaction into the journal. Same thing. It's just what this is, the same thing in the same basic format that you used. Now we're going to go to a different report, and it will be under accountants and taxes. We showed you the journal. Let's show you the general ledger. So this is the T accounts. By every account that we have, it's the general ledger. This is what gets posted. Where the journal entries get posted, you post them to the general ledger, just like your account, just like your homework. So here we posted a debit to the cash account, and we wrote a check for $1,000 for equipment rental, and we wrote a check for $650.20 for utilities. Continuing down under the owner's capital account, here's the debit, the credit side to this debit. Continuing on. We wrote a check for the equipment rental, so that's a credit to cash, and here's a debit to the equipment rental expense account. And then we have one more transaction because I just made a skeleton. And that's, we wrote a check which credited cash, and this is a debit to utilities expense, debit. So this is the T right here, and this is the balance. And then from that, let's go back to reports. We can go to accounting and taxes. Let's go to the, well, we can go to the adjusted trial balance, but we didn't make adjusting entries for we had the unadjusted balance, which is the first two columns of our work today. And then we have the adjustments section. And then this is the adjusted trial balance section. It's the same thing that what you're doing in this week that we covered in the lecture today. This is the same thing. Now we're going to go to reports, accounting and taxes. Let's see, anything else? Nope. So then if you want to go to reports, company and financial, profit and loss. Here's our June profit and loss. We had no revenue yet because we only had a total of 3 transactions. But here's our expense for equipment rental, and here's our expense for utilities. Looking at the balance sheet, company and financial, looking at the balance sheet, this is our cash balance, and this is our owner's equity. And so far we have a net loss of $1,650.20. Now, the reason I went over this is to show you the relevancy of learning the accounting in this program with Accounting 101 and 102, because this is the language of business. I don't know how many million businesses use QuickBooks as their accounting software package to manage their business. Hundreds and hundreds of thousands of businesses use this package, and it's affordable. It is also hosted online, where we have if you look up QuickBooks online, you could probably even get a free account for a short time to play with this. So hopefully, I'll get the chat back up. So hopefully that was interesting to you all. I know one person said that she'd be interested in seeing it. It's now the hour's up. Is there any other information that you want for this last lecture of this course?
I have a question.
Certainly.
Like when you first post to your T accounts
Yes.
in QuickBooks, does it automatically send the information to these other, like the balance sheet?
Yes.
And it automatically does that?
All you have to do is put the initial entry of it in, and it's there.
Okay.
It's really nice. So no, you're not going to be saying, I'm going to journalize it on the journal. Now I have to go into the general ledger and type it in again, and then take that and type it back into the income statement and balance sheet. Once you do the journal entry, it goes everywhere immediately. Makes it nice. Any other questions?
Nope, I'm good.
You're good? Well,
I'm good.
ladies, it's been a pleasure. I want to congratulate you for being at the top of your game and being on each week with me, because it makes it a lot easier to do a lecture talking to somebody and doing it with an empty room. So I do thank you. I congratulate you for wanting to learn accounting and staying with it. So thank you.
Thank you.
Thank you.
Okay, see you some other time virtually.
Bye.
Okay, bye-bye.
Bye-bye.